So you're looking to find out how to invest your money while beating inflation. Well, in this video, I'm going to be sharing with you the 5 top assets you'll want to consider investing in to beat inflation. Hey guys, welcome back to my channel. If you're new here, my name is Adrienne and I post videos every Monday where we talk about investing made simple. We are a community educating you to build long-term wealth through smart investing. So if that's something you're interested in, please consider subscribing by clicking that red button below. With that being said, let's get into the 5 top assets that you'll want to consider investing in to beat inflation. And stick around to the end and I'll give you the top 3 things you'll need to look for in companies before you invest in them during inflation. Number 1, TIPS. TIPS stands for Treasury Inflation Protected Securities. They are a type of US Treasury bond. If you want to know about bonds, you can go ahead and click the card up here. But TIPS are particularly good during inflation because they are indexed to inflation to protect the investor during inflation. TIPS pay out a fixed interest rate twice a year, and fixed meaning that the percent interest rate does not change with interest. What does change with interest is the principal amount of the TIPS. When inflation goes up, the value of the TIPS goes up as well, and therefore the interest you receive twice a year also goes up. Number 2, real estate. Real estate is particularly a good place to be in during inflation because as inflation rises, property values also rise. Now, there are 2 ways to invest in real estate to beat inflation. The first is with rental income, and this means that if you own a rental property, you can reasonably raise the price of your rent and earn more rental income over time, which therefore helps you to beat inflation over time. And if you don't have a rental property or you don't have enough money to purchase a rental property, the other way to invest in real estate is in what are called REITs. REIT stands for Real Estate Investment Trust, and they are a trust of companies that own and operate income-producing real estate properties across a range of property sectors. REITs also pay a dividend to investors, and like I said before, real estate is a good place to be in because when inflation rises, property values also tend to rise. The Vanguard Real Estate ETF is a popular REIT because it gives you a wide exposure of real estate properties, also has a low expense ratio of 0.12%. Number 3, commodities. Commodities are generally categorized as any sort of raw material like oil or grain. Historically, price rises of commodities is an indicator of inflation. And the reason that commodities are a good place to be in during inflation, because when the price of the commodity rises, the price of the products that use the commodity also rises. So for example, grain, if the price of grain went up, then the price of bread would also go up. You can also invest in commodities just like you invest in real estate individually through REITs. You can invest in commodity-based ETFs, which gives you a wide exposure to commodities. I'll drop a link down in the description of a list of commodity-based ETFs, which have expense ratios ranging from 0.25% all the way up to 3.5%. And always remember that the lower the expense ratio, the better. If you guys have found what you've heard so far helpful in any way, please go ahead and consider subscribing to my channel. I would really appreciate it. Number 4, gold. Although not perfect, gold does tend to hold its value even when inflation rises, even when currency values are falling and when inflation is rising. However, when your goal is to beat inflation, gold isn't necessarily the best asset to be in, but they can be used to diversify your portfolio. Obviously, you can invest in gold by purchasing physical gold, but if you don't want to purchase physical gold, there are also gold ETFs that you can invest in as well. You can invest in gold through the Spider Gold Shares ETF or the iShares Gold Trust. And number 5, stocks. The stock market is consistently outperforming any other market in the long term. However, not all stocks are made equal, obviously, especially during inflationary times. If chosen correctly, stocks have a high chance of beating inflation. With that said, here are my 3 tips on what to look for in companies to invest in during inflation. Number 1, look for companies that have high purchasing power. Purchasing power is the power to force suppliers to lower their prices. Home Depot is a really good example of a company with high purchasing power. Many of Home Depot's suppliers only supply to Home Depot, which means that the success of these suppliers is dependent on Home Depot purchasing from them. If inflation rises, Home Depot could have the power to force those suppliers to lower the cost of their goods, just so that Home Depot doesn't have to raise the prices of their goods. Tip number 2, look for companies that have high pricing power. Pricing power is the power to increase prices. Disney is a perfect example of a company with high pricing power. If inflation rises and Disney World now costs more to maintain and produce the same product, Disney can pass along this rise in price to its customers, and the customers will willingly pay this price increase. And that's mostly because there's no other product in the world like Disney World. But not all companies have this sort of high pricing power, so just be on the lookout for that. Tip number 3, look for companies that can handle a lot more business without having to spend a lot. Amazon is a perfect example of this, specifically Amazon's Audible, or any company that has any sort of digital product. When somebody purchases an audiobook on Audible, the audiobook is automatically transferred to the buyer's device. There's no product that has to be sent, which means that there's no additional cost to ship the product, which means there's no additional product cost and there's no additional shipping cost. This means that even through inflation, Amazon's Audible can keep their prices the same because they don't have to spend more in order to give the same product. So go ahead down in the comments, let me know what asset you are going to start incorporating into your portfolio to beat inflation. Thank you guys for watching this video. If you found it helpful, please go ahead and click the subscribe button below, and I will see you guys next Monday.